This is an absolutely critical week ahead for crypto markets as well as traditional markets. As you can see over here, the ascending triangle that we've been looking at for quite some time on our Bitcoin inverted chart is officially breaking out to the upside, and it has now confirmed another higher high, meaning that that is, of course, the reverse of that. It is not a good thing, and it's not looking good for the bulls. So we have a lot to cover today. You can see the entire crypto market is completely red, and a lot of us who have been watching the show have expected this for quite some time. We did target the third week of September as the most likely time for this to play out within the markets, and we have a lot to cover today. So let's get straight into it. As Benjamin Cohen says over here, it is September. What did you expect? And we had this historical data showing from September of 2010 that that is usually the most bearish months within crypto, and that is where we expect the most damage to be done. More specifically, the final week of September is usually where the worst of the worst takes place. And it looks like so far the market is giving us signs and clues that that's about to unfold right before our very eyes. And I'll show you chart-wise why it's such a dangerous situation. If you are somebody that is holding at the moment or you are in long positions, you might want to consider covering your losses and getting out, especially if you're in leverage positions. And of course, everything this week is going to be driven by the economic calendar on the Forex Factory over here. You can find that on Tuesday. We have CPI month on month. On Wednesday, we have the FOMC meeting with a statement and Fed funds rate, FOMC press conference. Now, I think that is going to be the main driver of the markets. That FOMC meeting is definitely going to be the main thing that we need to look at. And that usually bleeds out into the day of Thursday. Usually that's what we typically see, is that the day after is when the majority of the move happens. So you want to stay hyper focused this week. You want to be very, very in tune with the market and have your finger on the pulse, especially leading into Wednesday and Thursday. So somebody says, yeah, fallen angel alts are going to melt very soon. They are definitely. The alts ran harder than Bitcoin, and when Bitcoin takes back that dominance in a unfolding or unwinding market, that usually means that the altcoins are going to suffer the hardest, which for those of you who have been cash heavy, as I've recommended for many months now, you're going to be in a phenomenal position to position yourself well leading into the next run, whenever that may be. So looking at our Fed funds pivot indicator, we can see that leading into this week over here, very unlikely that the Fed is going to pivot. This is still going strongly towards the upside. You have the red line over here, which signifies the strength of the bears is weakening out. The strength of the bulls is increasing. We have the ADX, which is strengthening to the upside, which is giving that green moving average extra power to the upside, meaning that this is going to be a continuation on the Fed funds rate and still going to be a while before that pivot. So looking at this over here on the CME group, what are the probabilities so far priced in is 79% chance of a 75 basis point rate hike and 21% so far of 100 basis points. So I think we can say with almost certainty we are going to get a 75 rate hike, and then we'll just have to see if the Fed are going to surprise us with anything above that. You can expect that the market is going to react badly, and maybe that's why we're having the sell-off. People are already expecting that there's a possibility of that, and therefore they're trying to cover their long positions and get out and reduce the risk where they can. So I have some important economic information to cover by Macro Alf. I'm not a macroeconomist, so we turn to people that are. And you can see, he says here that the 5 largest economies in the world are experiencing the fastest slowdown in credit creation in over 20 years. And history suggests that earnings and economic activity will follow. And he says here, soft landing my ass. So with that being said, a lot of people think that the Fed is going to have some sort of, or control the market into a soft landing. But based on the data that he's looking at, he says that it's extremely unlikely. And what that basically means is that you want to be keeping your eyes out for potential capitulation within the market. Because if it is not going to be a soft landing, then it means you want to look for capitulation. And capitulations often provide the biggest opportunity of your life when it comes to, I don't advocate advocate catching a falling knife, but buying the absolute ultimate market bottom, you want to have your orders staggered and spread. Be prepared, because remember, when these things unfold and chaos strikes, the exchanges tend to shut down and freeze accounts, and therefore you won't be able to manually log on and execute those trade ideas. So I want to touch in a little bit on what he's covering here with getting the inflation back down to 2%. We do know that it's been the highest inflation in over 40 years, which is a scary, scary sign. And remember, the Fed have two tools in which they can control inflation. One is by raising the interest rates, and the other is reducing the balance sheet. So the two different ways, they have not been aggressive enough on reducing the balance sheet with quantitative tightening. So let's see what he says over here in the probability of how raising interest rates could curb the inflation rate. And I'll retweet this because it is quite a long one. I just want to cover some of it. He says, getting inflation back to 2% will be tough. Many expect the Fed will never be able to do that, with CPI settling in the 3% area. But history tells us that there is actually a way to get there, which is a recession. Let's look at the data with a short thread. So he says he went back 100 years and he looked at all US recessions since then. The idea was to test whether recessions are able to, one, bring down inflation at all, two, if so, to which extent, and three, for how long would it take for CPI to stabilize back to 2%. So he says, here's what he found. In all 11 episodes, when we entered a recession with inflation above 3%, the resulting sharp economic slowdown did bring inflation down. On average, that took 16.2 months to slow CPI from peak to 2%. The peak to trough reduction in CPI was 6.8%. So basically he's saying that this is going to take over a year and a half, but you need to be in a recession for that to happen. And remember, they haven't officially declared that we're in a recession, although we know that using the prior metric of what is defined as a recession is back-to-back quarters with economic slowdown in the GDP. And we have had that. We've had back-to-back slowdowns, but they keep changing the definition, which is confusing the hell out of everybody, and they're not able to determine whether we're in a recession or not. So these are important things. I have retweeted. Go read through this. Essentially what he's saying is that this time is a little bit different with the way that everything is calculated. So we need to get into a recession, and then at least there is, of course, it's a little bit painful. Nobody wishes for a recession, but that is one way that we can get out of this. Otherwise, they're just going to keep raising and raising and raising rates. So looking at the charts, though, let's see. We like to use charts to verify all this information and help us with what could potentially be coming in the future. And we do have all faithful logarithmic regression charts showing the overall growth of Bitcoin since the beginning of time and how it starts to form into this whole S curve over here. So looking at this, we've now been below the low bands for 14 weeks. So really, really looking bad. And we have now breached this line again for the second time. Remember, last week we punctured below that all-important $19,535 level. This is on a 2-week chart. Then now we've just started to come back below that. If we take out the previous week's low now, so we can probably move our indicator over here. What I would do is I would just grab one of these horizontal rays, put on our magnet, set that level over there. That's coming in at 18,563. That would now be the new line in the sand. Look, I think we're going to breach it. I really do. But as soon as you take that out, now you're going to have a bearish engulfing candle on a 2-week scale, and that is not looking good. And I mentioned to you, the longer that we spend underneath these all-important levels on the high time frame, the more you open up the possibility of a capitulation type of event. So with that being said, how could a capitulation happen? Because haven't the sellers exhausted themselves? You may be asking yourself, have the sellers exhausted themselves? They've been selling for over a year now, so how much more is left? Well, the market has changed over time, and I think Willy Woo made a great tweet thread over here, which I'm going to retweet because also it's one of the longer ones. Essentially, what he says here is a dummy's guide to selling 42 million Bitcoin. For those of you who are out there, you'll know that, of course, the supply of Bitcoin is limited to only 21 million. So how on earth do you sell 42 million Bitcoin? And what would that do to the market? Well, since the inception of derivatives market and leverage leverage trading, you know that for if you have $100 and you use 10x leverage, it's the same thing as trading with $1,000. And the same is true. If you are holding one Bitcoin, you have the power as one seller out there to now trade with 10 Bitcoin and short the market to the downside. And these are things that you need to be cognizant of and cautious of. This market is not led necessarily by the hodlers, although on-chain metrics often show these massively positive signs of how whales are accumulating, and they paint this beautiful story. I don't buy into it, because leverage markets that's exactly what it is, right? You're leveraging up. If they start to short sell with thousands of Bitcoin, you can now start to move entire markets. And he goes on to explain that. And this is why you need to look at the funding rates when you are trading. Pay attention to what's going on with the leverage market, whether it's weighed up on the short or the long side. That will give you an indication of what's happening. In these markets are very liquidity driven, meaning big players want to push price up to where they either see a lot of buys or sells. And I can tell you, there's a ton of buys that are stacked around $10,000 to $12,000, and it's inevitable. They're going to go for that liquidity, whether it's now or later. I'm impartial to whether we're going to go shooting up to 30K first and then go back down. But eventually they're going to go for that liquidity, because this is how these markets tend to move. So weekly chart, again, very bad. Took out our previous week's range low. You can see that over there. We closed that week red, opened the new week red, continuation straight to the downside. Your next target levels or areas of interest are going to be 16,153. Better hope that we bounce there, lose that level. Then you go targeting the key yearly level, which is at $13,880. Remember, I told you that the more time that you spend below this 200 MA and 255 MA on a weekly chart, the bigger the potential of a capitulation. And if it was going to happen, I mean, this week's is as good as any week for something like that to take place. What about Ethereum? Complete sell the news event, just as I anticipated over there. I haven't readjusted these yet. Let's just quickly move those over. There we go, weekly high. Take that over to the weekly low. This would be the new areas that price needs to get back into. If price on Ethereum recaptured this zone, will probably trade within a range between the weekly high and weekly low. Otherwise, look, at least it's a different time horizon, right? It's not as old as Bitcoin, so it is still holding above its 200 and 255 MA. But if it loses that level, next area of interest for me, $728. And then let's just leave it at that. I don't want to scare you guys. We won't talk about what goes below there. Okay, so as I just mentioned, with markets being controlled as well by leverage traders and by options traders, you can see by this over here with markets and mayhem, options traders appear to be quite concerned. They're hedging very aggressively into this week's FOMC, meaning, well, maybe they're expecting a worse result than most anticipate. And this is on the S&P 500. The past 2 weeks are at record lows over here with the normalized speculative options premiums. So let's look at the actual traditional markets and see what we can deduce on that before we delve further into crypto and the lower time frames over here. So very, very important. You can see, look, I told you we're forming some sort of a triangle. The eventual break of that triangle to the up or the downside would most likely result in a big move going into the next week. Here we are. We've broken the downside. We lost the liquidity zone over here, which is this box. And now you're looking for new targets, right? Ultimately, you're probably going to be targeting somewhere around these lows over here. And you better hope that we bounce over there, because that will for sure have an effect on the crypto market. You lose that level. Look, and I would say there will be at least some short-term bounce there, by the way. So if you see a strong continuation like this week, probable bounce over there, maybe lose that, and then that's the ultimate zone that we're looking at. Pre-COVID levels, that has been the target for a very, very long time. You all know that. So I don't get interested in the market at all until I see us hit this area and start to bounce, at least for, my long-term trading positions. What about the NASDAQ, which is, as we know, one of the most correlated to crypto? Rejection off of the trend line once again, broke below that dash line that we had as a continuation level. If we lose that, we're coming into the support box. I expect that this week we're going to hit the support box. Maybe we go through it. Key quarterly level, same as what I just showed you on the futures chart for the S&P 500, is your pre-COVID level zones. Let's see what the Bitcoin dominance is doing. Okay, let's move that onto a high time frame. We'll go for, let's say, a weekly chart. Okay, Bitcoin dominance. This is the traditional Bitcoin dominance that most of you would be looking at. So it kicked on up towards the upside, expecting a push towards the mid-range. Looking at Bitcoin dominance, excluding those stable coins, it's recaptured mid-range, probable test of support over there, and then also targeting towards the range high. DXY, you got to be in dollars. Dollars look strong, powerful. That's the currency to be in, at least from a charting perspective. The euro is getting absolutely hammered. And that's one of the reasons, right? Because the euro is part of the formula for how they determine the DXY or the dollar index. Strong continuation to the upside, expecting 111 possibly this week, depending on what happens with the FOMC. And then we take it from there. But all you need to know with this is a strong uptrend. I wouldn't fade this thing. I would rather wait for a bearish engulfing candle on a weekly chart whenever that may happen and lose out on part of the move. Because, when you get that bearish engulfing candle, that means that, of course, equities and crypto will probably rally off that in trying to front run the reversal. And I'll wait for confirmation. I'm patient, but that's traditional markets for you. Going on to crypto, here we go. Inverted chart, ascending triangle, looks to be breaking out, as I just mentioned. Perfect retest of the diagonal trend line over here, taken out the previous highs. So we would probably have this area now. Let's grab that. And this would be your next higher low, which has now been confirmed. And now we're targeting the next higher high. This is, of course, on a 3-day chart. And look, very aggressive. I know I'm not going to be, waiting for this or holding my breath on this, but this is a real possibility. I don't even want to say it, but yeah, let's just say on average, this measured move on this triangle would take you to about $8,000 on Bitcoin. Bear in mind, because this is the inverted chart. Okay, moving on. Also a 3-day chart, perfect rejection. As you can see, this is the inverted chart that I just showed you, but the correct way around. We've lost final support. And this is all the liquidity that you have here. It's not much. As you can see, let's zoom in on that. So this area here is pretty much your only level that is holding as support, which was based off of our previous all-time highs as well. If you go all the way back to 2017, that's not much. That's not much closing price action, which is what creates a strong support zone. So this is free space, as I have mentioned to you many times before. And once the yearly lows get taken out, the yearly lows from this year is 17,592. Guys, look at this. You have to ask yourself, right? If I switch this now, so yes, a lot of people are looking at that area as a bottom, but what you want to do is you really want to be focused on the closes. All you need to do is put that chart on a line chart over there, and you can see we're closing lower and lower each time. So somebody asked, what are your thoughts on CME gaps? Well, my thoughts are that, look, I wouldn't wait on them. If the market shows signs that it's turning around, for example, the $28,000 CME gap, many people were waiting for that, and consequently they got wrecked. Look at where we're sitting now. You've lost out a huge move, but do I think that they will probably get filled? Yes, I think most of the CME gaps eventually will get filled. Not all of them, but most of them. They can remain open for many, many years. So quickly touching on the sponsors, shout out to the sponsors. Have a look in the link in the description below. Prime XBT, check them out. OKX, check them out. Great for portfolio building. They give you a whole analysis on OKX of what you're up for on the week, on the month. It's brilliant from a portfolio perspective. So check those out. If you are interested, use the links in the description below. You lose nothing. I get a little bit. It supports me. So I would appreciate it if you use that. Okay, touching on the super guppy indicators over here. We have really hammered on this, and I think it's saved a lot of our bacon. It's basically bull trap was finally confirmed. We have 3 confirmed bull traps. Remember, these markets move in 3 phases: contraction, expansion, contraction, expansion, contraction, expansion. Final leg of expansion is what I'm waiting for. And you can see that expansion is taking place to the downside. So this would be the time over the next couple of weeks to months that you probably want to consider dollar cost averaging. What about Ethereum? Ethereum's expansion slowly started to turn red, even bigger bull trap than what you found with Bitcoin, because the gray was starting to squeeze in closer and closer with the potential of turning green, but it didn't fool us. We said we need to recapture the main resistance level, which we failed to do so over here. So looking like expansion to the downside, massive bull trap confirmed. Bitcoin on the daily chart over here, for those of you who are trading the EMA strategy with the 34.9 EMA strategy, or the 1224, which I've shown you many times before, you would have shorted around this level over here and you would be mega in profit. Same thing, daily chart, we've lost this level over here. Let's wait for the daily close. If the daily closes underneath this level like it is now, I would expect more continuation to the downside. And then, eventually we can start to look for those mean reversion trades where we can play it back towards the moving averages. But at the moment, that's not the case. What about Ethereum on this chart on a daily? Ethereum, so I did outline this as well, two potential plays going into the merge. Either we have a super bullish play that we try and recapture the liquidity over there and then go back down. As you can see, failed, broke below the EMAs. We took the path of least resistance, which was to the downside. We've lost the support level, and now you want to be targeting the lows on Ethereum. If you are somebody that wants to buy Ethereum, it doesn't look as bad as Bitcoin, but that's kind of the level you're going for, hoping for a bounce around $1,000 mark. That's where you want to see Ethereum bounce out of there. Okay. Going on to this chart over here, which is our 4-hour chart, you can see that the momentum oscillators are getting quite extended to the downside. So there will be bounces along the way. I don't personally anticipate, unless it's Wednesday or Thursday, I don't anticipate a straight down move. I do think there'll be bounces along the way. Ethereum looks similar. I mentioned in the daily candle newsletter. Sign up to that if you're not already. Link is in the description. Plenty alpha from myself and Sheldon. I said once this level gets taken out, then the bears take back control over here within the market. And that's exactly what's happened. Ethereum looking for a potential bounce, but there's no guarantees on the 0.786 fib retracement level. That comes in at 1,126. But I want to remind you, if you take a look at this one on Bitcoin, this one smashed right through the 786. So again, no guarantees. It's just an area where you can potentially set up a long trade based off of a potential bounce with your invalidation just underneath that level. It's not relevant right now. I'll cover it on the Discord when it does become relevant. Okay, quickly touching on the range chart. Look, one hope that certain players who are looking to scalp the market may have is they may be targeting this zone over here. What you want to do is, if you are viewing this as a range, you want to grab a line over here like that, put a dash line, and basically you'd be looking to long with an invalidation underneath that. You're really hoping that this is going to turn out into a deviation play, right? So you have deviation. Let's just turn that off. Deviation, you have a deviation back into range, back into range, back into range, and now you're hoping this is also going to be some sort of a deviation. If you are looking for the long trade, let's just grab that. Where is it? Okay, here we go. Long position. You'd be looking for something like this, targeting back towards the range high and stops underneath the previous wicks. That is currently giving you let's just move that up, a risk to reward ratio of 1 to 4. So it's not bad. Anything above a 1, I don't recommend taking any trades that don't give you a risk to reward above a 1 to 3. That is your long opportunity, is something like this. You could pretty much enter right here, start scaling in a little bit more aggressively as you get to the downside. And a lot of people get confused when I say that. What I simply mean is that I like to build bigger positions as I get closer to the invalidation. So what I would do if I were taking this trade right now, I would enter 10% right here like that.
Let me just get Carl to tell him it's time for the morning meeting.
Here comes Run.
Carl,
this is the morning meeting.
Carl,
you just need to come on the alpha show here.
There's no alpha on the show anyway.
How's it? Welcome back. We're so glad that you're back.
It's time for the morning meeting, bro.
Okay, I'll be there in I'm ending off right now. It's the last chart.
You can't be.
No, you can't. You can't.
You can't be late for the morning meeting.
I'll be there now. It's the mic and stuff.
How long do you need?
5 minutes.
No,
if that.
no, no, that's
2 minutes.
2 minutes. I'm timing you, bro.
Welcome back to Cape Town. We're glad to have you back. Hey, James.
Yeah.
Yeah, so nice to have you back. Nice pants this.
Okay, guys, I'm going to be ending off here quick just to wrap up what I'm saying on this trade. So I would enter 10% there. Then you're looking at entering in 10% increments. I usually leave the final 50% for the bottom as I'm about to get invalidated on that move. So that brings us to the end. I appreciate each and every one of you.
It's the end of the show. It's the end of the show.
Wait,
It's
like,
the end of the
subscribe,
show. It's the end of
hit the
show.
bell
End of